In this video, we'll show you 3 hypergrowth tech stocks that could deliver exceptional long-term returns as artificial intelligence and next-generation computing reshape the global economy. These are not ordinary technology companies. Each one is positioned at the center of a powerful trend that could create enormous shareholder value over the next decade. And by the end of this video, you'll understand why their biggest growth opportunities may still be ahead. The first company deserves attention because it sits at the heart of one of the biggest shifts happening inside artificial intelligence. While many investors continue chasing the obvious names, this business is quietly becoming one of the most important infrastructure providers powering the AI revolution behind the scenes. That company is Broadcom, ticker symbol AVGO. Artificial intelligence has become one of the most competitive races in history. Every major organization wants faster computing, lower operating costs, and more efficient AI infrastructure. That demand is creating opportunities that extend far beyond traditional processors. As AI models become larger and more specialized, companies are beginning to realize that one size does not fit all. This is exactly where Broadcom has built a significant competitive advantage. For years, Broadcom established itself as one of the world's most important semiconductor companies by designing mission-critical chips used throughout communications, networking, broadband, wireless infrastructure, enterprise storage, and cloud computing. Many of its products are deeply embedded inside systems that customers depend on every single day. That business alone is impressive. But today the story has evolved into something much bigger. Broadcom has become one of the leading developers of custom artificial intelligence chips, and this business could completely transform the company's future. Instead of simply selling standardized processors, Broadcom works directly with customers to design highly specialized AI chips that are optimized for specific workloads. These custom chips can perform AI training and inference more efficiently while lowering operating costs compared with relying exclusively on traditional graphics processing hardware. That may sound like a small technical improvement, but it represents a massive economic advantage. Running advanced AI models requires staggering amounts of computing power. Every percentage point of improved efficiency can save companies millions, and in some cases billions, of dollars over time. As AI deployments become larger, businesses are becoming far more focused on optimizing both performance and cost. Broadcom is helping solve exactly that problem. Its engineers collaborate with customers to build chips tailored for their unique AI applications. Once those workloads are established and optimized, the custom silicon can provide better economics over the long run. That creates an attractive business model. These projects typically involve years of collaboration, extensive engineering expertise, and long product cycles. Once Broadcom becomes deeply integrated into a customer's AI infrastructure, switching becomes expensive and disruptive. That creates strong customer relationships while also building an impressive competitive moat. Perhaps the most exciting part is that management believes this opportunity is only beginning. Broadcom has projected that its AI semiconductor business alone could generate approximately $100 billion in annual revenue by 2027. Think about what that means. Just last year, the company's total revenue across every business segment was roughly $64 billion. Management believes a single division could eventually become dramatically larger than the company's entire business was only a short time ago. That projection helps explain why many analysts continue viewing Broadcom as one of the strongest long-term AI investments, despite its already enormous size. Some investors mistakenly assume hypergrowth opportunities only exist among smaller companies. Broadcom challenges that assumption. Although its most recent quarterly revenue increased by 48% year-over-year rather than crossing the 50% threshold often associated with hypergrowth companies, the growth trajectory ahead remains remarkable. Current expectations point toward revenue increasing by roughly 66% this year, followed by another 62% next year. Those are extraordinary numbers for a company operating at Broadcom's scale. Businesses of this size rarely sustain growth anywhere close to those levels. So what is driving such explosive expectations? The answer goes beyond custom AI chips. Artificial intelligence requires an enormous amount of supporting infrastructure. Servers need high-speed networking, data centers require advanced connectivity, massive volumes of information must move rapidly between processors, storage, and memory. Broadcom supplies many of the technologies that make this possible. As organizations build increasingly sophisticated AI systems, demand grows not only for computing hardware, but also for the networking equipment connecting everything together. That creates multiple growth engines operating simultaneously. Instead of depending on one breakthrough product, Broadcom benefits from a broad ecosystem of technologies supporting AI deployment. That diversification reduces risk while expanding opportunity. Another reason investors appreciate Broadcom is its history of execution. Technology changes rapidly. Many companies promise transformational innovation but struggle to convert those promises into profitable businesses. Broadcom has consistently demonstrated an ability to identify valuable technology trends, integrate acquisitions successfully, and generate substantial cash flow. That financial strength gives management flexibility. The company can continue investing aggressively in research and development while also expanding manufacturing capabilities and pursuing additional strategic opportunities. Strong cash generation becomes especially valuable during periods when competitors may struggle to fund similar investments. Scale creates advantages. Experience creates advantages. Engineering talent creates advantages. Broadcom possesses all three. Another important factor investors should consider is the changing nature of artificial intelligence itself. Early AI development focused primarily on building increasingly larger models. Today, the conversation is expanding. Companies now want models that perform efficiently in specific industries, specialized business functions, healthcare applications, cybersecurity, financial analysis, manufacturing, and countless other areas. That shift favors customized computing solutions. Rather than relying exclusively on general-purpose hardware, businesses increasingly benefit from chips designed specifically for their own workloads. Broadcom sits directly in the middle of this transition. If that trend continues accelerating over the next several years, the addressable market could become much larger than many investors currently expect. It is also worth recognizing how difficult Broadcom's business actually is to replicate. Designing advanced semiconductors requires years of engineering expertise, sophisticated software tools, extensive testing, manufacturing relationships, and customer trust. These are not capabilities competitors can build overnight. Even if demand continues exploding, relatively few companies possess the technical resources necessary to compete effectively at this level. That scarcity strengthens Broadcom's competitive position. Of course, no investment is without risk. Artificial intelligence spending could eventually slow. Economic conditions may reduce enterprise technology budgets. Competition could become more intense. Semiconductor cycles have historically experienced periods of rapid expansion followed by temporary slowdowns. Those realities should never be ignored. However, the long-term investment thesis appears driven less by short-term fluctuations and more by structural changes happening throughout the global economy. Artificial intelligence is gradually becoming essential infrastructure rather than an optional technology experiment. Businesses want faster automation, governments want stronger computing capabilities, researchers need larger computational resources. Cloud providers continue expanding capacity. Every one of those trends creates additional demand for advanced semiconductor technologies. Broadcom participates across multiple layers of that ecosystem. That broad exposure reduces dependence on any single customer or product line, while increasing opportunities to benefit from continued AI adoption. One aspect many investors overlook is the compounding effect of long-term customer relationships. When companies invest billions building AI infrastructure around customized hardware, they are unlikely to redesign everything every few years. Successful deployments often lead to follow-on projects, expanded partnerships, software optimization, and additional generations of hardware. Those relationships can become increasingly valuable over time. That is exactly the kind of business model long-term investors often seek: high switching costs, deep customer integration, mission-critical technology, strong profitability, expanding end markets. Combined together, those characteristics help explain why Broadcom continues attracting attention despite already delivering exceptional returns. Looking ahead, perhaps the biggest question is not whether artificial intelligence will continue expanding. The more important question is who supplies the essential infrastructure making that expansion possible. Broadcom appears well positioned to remain one of those critical providers. If management successfully executes its strategy and AI semiconductor revenue approaches its long-term targets, today's business could look dramatically different only a few years from now. That possibility is exactly why many investors continue viewing Broadcom as one of the most compelling hypergrowth technology opportunities available today. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The second company is approaching the artificial intelligence revolution from a completely different angle. That company is Micron. Ticker symbol MU. Every artificial intelligence model depends on memory. The larger and more sophisticated an AI model becomes, the more data it needs to process, store, and retrieve in real time. Every request, every calculation, and every output depends on moving massive amounts of information as quickly as possible. That makes memory one of the most important components inside modern data centers. Think about it this way. A world-class athlete is only as effective as the speed at which they receive information and react to it. The same principle applies to AI infrastructure. The processors may do the thinking, but memory supplies the information they need to keep working at maximum efficiency. As AI models continue growing in complexity, memory becomes even more valuable. This is where Micron has found itself in an incredibly favorable position. The explosion of artificial intelligence has created demand unlike anything the memory industry has experienced before. Data centers around the world are expanding at an extraordinary pace, and every new server requires large amounts of advanced memory to support increasingly demanding AI workloads. The result has been a supply environment that remains remarkably tight. For years, memory chips experienced cycles where oversupply pushed prices lower before demand eventually caught up again. Investors became accustomed to viewing memory manufacturers as highly cyclical businesses. Artificial intelligence is beginning to change that narrative. Demand has accelerated so rapidly that supply has struggled to keep pace. Instead of fighting excess inventory, manufacturers are working to satisfy customers that need more capacity than the industry can currently deliver. That shift matters enormously. When demand consistently exceeds supply, pricing power improves. Higher prices generally translate into stronger revenue growth, expanding profit margins, and healthier cash generation. That is exactly what investors want to see. Micron has become one of the biggest beneficiaries of this changing environment. Its advanced memory solutions have become increasingly important for AI servers, cloud infrastructure, and enterprise computing. As organizations invest billions building artificial intelligence capabilities, they also need the memory technologies that allow those systems to operate efficiently. The opportunity extends well beyond one product cycle. Artificial intelligence is still in its early innings. Every new generation of AI models requires greater computing performance, larger datasets, and significantly more memory capacity. As those requirements increase, memory content per server continues rising as well. That creates a powerful long-term growth driver. Instead of simply selling more units, Micron can benefit from customers needing more memory inside every individual system. This compounding effect could continue for years. One of the most encouraging developments came from management's outlook regarding industry conditions. During its latest earnings discussion, leadership indicated that tight supply and strong demand are expected to persist beyond 2027. That is an important statement. Investors are constantly trying to determine whether today's exceptional growth is temporary or sustainable. Management believes favorable market dynamics may last much longer than many originally expected. If that forecast proves accurate, Micron could continue operating in an environment where demand remains consistently ahead of available supply. That would provide a strong foundation for continued financial growth. Of course, investors should still recognize that the memory industry has historically experienced cycles. New manufacturing capacity eventually comes online. Technology improves. Supply expands. Eventually, pricing can moderate. Those risks always deserve consideration. However, the scale of AI infrastructure investment happening across the global economy suggests demand may continue growing faster than many anticipated just a few years ago. Cloud computing continues expanding. Enterprise AI adoption is accelerating. Governments are investing heavily in advanced computing capabilities. Research institutions require increasingly sophisticated infrastructure. Each of those trends contributes to higher memory consumption. The remarkable thing is that artificial intelligence workloads require dramatically more memory than many traditional computing applications. That means future growth is not simply about shipping more chips. It is also about increasing memory requirements within each server. This structural shift could reshape the industry's long-term economics. Another reason Micron deserves attention is its technological leadership. Producing advanced memory solutions is incredibly difficult. It requires years of research, sophisticated manufacturing processes, enormous capital investment, and relentless innovation. Only a limited number of companies possess the expertise necessary to compete at the highest level. That creates meaningful barriers to entry. Building an advanced semiconductor fabrication facility costs billions of dollars and takes years to complete. Even after construction finishes, achieving competitive yields and product quality represents another major challenge. These realities make it extremely difficult for new competitors to enter the market. That helps protect established industry leaders. For long-term investors, competitive advantages like these matter tremendously. Companies with durable technological leadership often enjoy stronger pricing power, more stable customer relationships, and greater resilience during economic uncertainty. Micron appears well positioned in each of those areas. Another factor worth considering is how quickly AI infrastructure spending has evolved. Only a few years ago, artificial intelligence was primarily viewed as an experimental technology. Today, businesses increasingly view AI as essential infrastructure capable of improving productivity, reducing costs, accelerating innovation, and creating competitive advantages. As adoption spreads across virtually every industry, demand for advanced computing hardware continues climbing. That creates a favorable backdrop for companies supplying critical components rather than optional accessories. Memory falls firmly into the critical category. Without sufficient memory, even the most advanced AI systems experience bottlenecks that reduce overall performance. Customers understand this. That is why they continue investing aggressively despite elevated pricing. One question investors often ask is whether today's demand could eventually fade. It is a reasonable concern. History has shown that technology spending can fluctuate. However, consider how rapidly organizations are integrating AI into their long-term strategies. Once businesses deploy AI across customer service, logistics, software development, healthcare, manufacturing, financial analysis, and countless other operations, reducing computing capacity becomes much more difficult. Instead, demand often continues increasing. That creates recurring opportunities for infrastructure providers. Micron also benefits from another powerful trend. Artificial intelligence models themselves continue becoming larger. Every new generation processes more information, supports more users, and performs increasingly complex tasks. Those improvements generally require additional memory resources. In other words, success within artificial intelligence actually strengthens demand for advanced memory technologies. The two trends reinforce each other. As AI becomes more capable, memory demand grows. As memory improves, AI systems become more powerful. That feedback loop could continue driving industry growth for many years. Investors should also pay attention to profitability. Rapid revenue growth is exciting, but sustainable investing ultimately depends on generating attractive earnings and cash flow. Micron's improving pricing environment has helped strengthen both. As production becomes more profitable, management gains greater flexibility to invest in research, expand manufacturing capabilities, and prepare for future demand. Financial strength often creates competitive strength. Companies with healthy balance sheets can continue investing during industry downturns while weaker competitors pull back. Over long periods, those investments frequently translate into larger market share and stronger shareholder returns. That is one reason many experienced investors look beyond quarterly headlines. Instead of focusing exclusively on short-term price movements, they ask whether the underlying business is becoming stronger. In Micron's case, the answer appears increasingly positive. The company operates in one of the fastest-growing areas of technology infrastructure. Industry supply remains constrained. Demand continues accelerating. Management expects favorable conditions to persist beyond 2027. Artificial intelligence adoption remains in its early stages. Each of those factors supports a constructive long-term outlook. Does that guarantee exceptional returns? Of course not. Every investment carries uncertainty. Technology evolves, competition intensifies, economic conditions change. Those realities never disappear, but investing is ultimately about probabilities. When a company operates in an expanding market, possesses technological leadership, benefits from structural demand growth, and continues improving its financial performance, the long-term probability of creating shareholder value becomes increasingly attractive. That is exactly why Micron continues earning a place on many investors' watch lists. As artificial intelligence reshapes industries across the global economy, memory is becoming one of the most valuable resources supporting that transformation. And if management's outlook proves accurate, this story could still be much earlier than many investors realize. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. The third and final company takes us beyond today's artificial intelligence revolution and into what could become the next major leap in computing technology. That company is IonQ, ticker symbol IONQ. If artificial intelligence is changing how computers think, quantum computing could eventually change what computers are capable of solving. This is one of the most exciting areas in technology because it has the potential to tackle problems that would take even today's fastest computers an incredibly long time to complete. While the technology is still in its early stages, the progress being made is attracting attention from researchers, businesses, and investors around the world. Unlike traditional computers that process information using bits that are either 0 or 1, quantum computers use quantum bits, often called qubits, which can represent multiple states simultaneously. That allows certain types of calculations to be performed far more efficiently than would ever be possible using conventional computing methods. The technology is extraordinarily complex. Building a commercially useful quantum computer requires overcoming enormous engineering challenges, maintaining stability at the quantum level, minimizing computational errors, and continuously improving system reliability. This is where IonQ has separated itself from many early competitors. The company has established itself as one of the leaders in quantum computing by focusing relentlessly on improving accuracy. In fact, IonQ's technology currently holds the world record for quantum computing accuracy, an achievement that reinforces its reputation as one of the industry's technological leaders. That may sound like a technical milestone reserved for scientists, but accuracy is everything in quantum computing. A powerful quantum computer that frequently produces incorrect answers has very little practical value. Businesses need reliable systems before they can confidently build commercial applications around them. IonQ understands that. Rather than racing to build the largest machine at any cost, the company has prioritized creating systems that consistently deliver dependable results. That disciplined approach could become a major competitive advantage as the industry matures. One of the biggest criticisms surrounding quantum computing is that it is still years away from widespread commercial adoption. That observation is fair. Most experts agree that truly transformative quantum computing applications are still under development. But that does not mean companies like IonQ are simply waiting for the future to arrive. Quite the opposite. IonQ is already generating revenue by selling early-stage quantum computing systems, providing cloud-based access to its technology, and partnering with organizations that want to explore how quantum computing can solve complex problems in the years ahead. These partnerships are incredibly valuable. They allow customers to begin experimenting today while giving IonQ important feedback that helps improve both its hardware and software. In many ways, the company is building long-term customer relationships before the industry reaches full commercialization. That strategy could prove extremely important. When organizations eventually deploy quantum computing at scale, they are likely to prefer working with partners they already know and trust. IonQ is positioning itself to become one of those trusted partners. The company's financial growth reflects this early momentum. Revenue has increased at an astonishing 755% year-over-year. That is one of the fastest growth rates anywhere in the technology sector. Numbers like that immediately capture investors' attention. However, revenue growth alone is not the entire story. The more important question is whether that growth is supported by expanding industry demand and improving technological leadership. So far, the evidence appears encouraging. Interest in quantum computing continues growing across industries ranging from pharmaceuticals and healthcare to logistics, financial services, advanced manufacturing, cybersecurity, and scientific research. Many of these industries face optimization problems involving millions or even billions of possible outcomes. Traditional computers can certainly solve many of these problems, but some calculations become incredibly time-consuming as complexity increases. Quantum computing could dramatically accelerate certain categories of these calculations. Imagine discovering new medicines faster, optimizing global supply chains more efficiently, designing advanced materials, improving financial modeling, strengthening cybersecurity. These are only a few of the opportunities researchers continue exploring. The total addressable market could become enormous. Some estimates suggest the quantum computing market could reach as much as $72 billion annually by 2035. That projection highlights why investors are paying such close attention to companies developing this technology today. Of course, projections are not guarantees. The road from promising technology to profitable commercial business is rarely straightforward. Many obstacles remain. Hardware must continue improving. Software ecosystems need further development. Customers must identify practical applications that justify widespread adoption. Competition will almost certainly increase. These risks are real. Investors considering IonQ should recognize that this remains an early-stage growth company. Its future success depends heavily on continued technological progress and expanding commercial adoption. That also explains why the opportunity could be so significant. Markets often reward companies that successfully establish leadership during the earliest phases of transformational technologies. If IonQ ultimately becomes one of the dominant players in quantum computing, today's business could look dramatically different 10 years from now. That possibility is what attracts many long-term growth investors. One particularly encouraging aspect of IonQ's strategy is its focus on steady execution rather than unrealistic promises. The company continues announcing new research achievements, expanding customer relationships, and developing practical use cases instead of simply talking about theoretical possibilities. That approach helps build credibility. Technology investors understand that breakthroughs rarely happen overnight. Meaningful innovation usually occurs through continuous improvement over many years. IonQ appears committed to following that path. When you step back and compare all three companies featured in this video, an interesting pattern begins to emerge. Each business occupies a completely different layer of the future computing ecosystem. Broadcom is helping build specialized artificial intelligence infrastructure. Micron supplies the advanced memory that allows those AI systems to perform efficiently. IonQ is developing a computing platform that could eventually solve problems beyond the reach of conventional systems. Rather than competing directly against one another, each company addresses a different technological challenge. That diversification is one reason these businesses are so compelling. They give investors exposure to multiple long-term growth trends without relying on exactly the same business model. Of course, each carries different levels of risk. Broadcom offers the scale, profitability, and established customer relationships of a mature technology leader while still benefiting from exceptional AI-driven growth. Micron provides exposure to one of the most critical components supporting AI infrastructure, with favorable industry dynamics that management believes could continue beyond 2027. IonQ offers the highest uncertainty, but also perhaps the greatest long-term upside if quantum computing fulfills its enormous potential. Which investment ultimately delivers the strongest returns will depend on execution over many years. That is why long-term investing requires patience. Successful investors understand that transformational businesses often experience volatility along the way. Short-term price swings rarely determine long-term outcomes. Business fundamentals do. If these companies continue strengthening their competitive positions, expanding their technologies, and serving rapidly growing markets, patient shareholders could be rewarded over time. That is exactly why keeping your focus on the underlying business instead of daily market headlines can make such a meaningful difference. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I would love to hear from you. Which of these three businesses do you believe has the strongest long-term competitive advantage? Broadcom, Micron, or IonQ? Let us know in the comments and explain what gives that company the biggest edge over the others in the years ahead. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.